You know what you're going to be watching in the next several minutes? XRP, XDC, and XLM news content. We're going to talk about price action along with big macro events happening this week. We actually got quite a bit happening this week. And some of it, I'll admit to you, is good news that could keep this current rally going. But there's some things on the horizon that I'll share with you that might not be so good. I just got done with an 8-mile run, and now we're gonna have some fun and learn about crypto. Fucking A, everyone. Hayward Rideout kicks us off saying, you are 100% right. Klaus David Schwartz should stop playing word games. And he's maybe the biggest influence of everyone. Stop saying shit. Giving people false hope of huge pumps is just bullshit. I agree. CEOs, CFOs, high-level execs out there should have some social media clauses built in, code of conduct clauses, just throwing it out there. Bitcoin's sitting at 34,815. Miners are starting to make money. Sailor is up pretty good. We're talking at least 15% right now. ETH 1803. XRP, we're going to talk about 56.1. XLM 11.6. XDC 4.8. Wait until I show you the XDC stuff here. But first, hold on to your hats. I ain't wearing no hat. So hold on to whatever you can hold on to. Maybe it's the feminita next to you. Maybe it's the dude next to you for the 7% of the ladies that watch this channel. Thank you, ladies, by the way. Subscribe if you're a female viewer and you haven't. You should really think about it. And male viewers, too. I was just giving a shout-out to the ladies. All right, here we go. We got the Fed. We got a lot of stuff going on, but let's dig in. But at least oil prices were lower on the week and have fallen 5% or so in October, despite Middle East tensions rising. Gasoline's off nearly 10% since mid-September peak, but remember that peak wasn't really supposed to happen, but it happened because of the Middle East action. Fed's rate decision due Wednesday. Guess what? Jerome Powell probably not going to do anything. You got like a 99% chance that they're going to take a pause. We've also got 1,100 earnings reports coming out this week. Biggie, some big tech ones out there, and we know how tech can move and influence the market. We've also got factory orders, manufacturing activity, along with jobless claims. So a lot of macroeconomic data that could affect all of these that you see on the screen. And don't worry, this will make sense later. Some very interesting things I have to show you on this chart. Crypto scams decline in Ireland as fraudsters should focus. I brought this up earlier, okay? A story I did earlier too. But I want to reemphasize a point on this, okay? And the point of this is that the reason fraud, specifically in Ireland, is going down for crypto, and I would assume the rest of the world, is because the crypto market is drying up. Criminals are like, yo, there's no trust in crypto. And the way you get money, the way you scam people out of money is by earning their trust. So if a lot of people right now in crypto have been burned and they're not having trust in crypto, and we know there's low trust in crypto. Let's not be negative, okay? Let's just be realistic about it, not put our heads in the sand. We're not being negative. We're just telling the truth. There's a big trust problem financially in crypto. So with that problem widespread, right, we talked about TVL being super low, right? Total value locked, you know. With TVL being down and a lot of people not playing, look at the Stellar chain, by the way. Not as many transactions happening on the Stellar chain over the last several months. So with not as many people playing in crypto, not as many people using crypto, money's expensive, so you're seeing a lot of whales kind of move to the wayside. These scammers are like, yo, we got to go where the money is. So guess where they went? They went to traditional banks. Why? Because there's more trust in traditional banks. Unlike complex cryptocurrency scams that once dominated the fraud landscape, these scammers are now adopting a more traditional approach. They're imitating banking websites and creating counterfeit brochures to deceive victims into parting with their savings. Detectives have identified over 20 bank accounts in the UK being utilized by these fraudsters. Now, the reason I'm bringing this up is because they're moving to banking is because people have more trust in banks, and that's where they're storing their money. There's a lot of people, and I know we talk about economic times being tough. The economic times that are tough are for people that are living paycheck to paycheck, all the way up to about the middle class right now, because the middle class still does carry quite a bit of debt percentage-wise. So with now the upper echelon people being the ones that are like trying to put their money somewhere, right? We talk about store of value. Bitcoin is a store of value. XRP is a potential store of value. Stablecoins. But now you got a bunch of people exiting the market, right? TVL is down. Total market cap is down. Volume is down. That money, right? And some of it is going over into traditional banks. So now that these criminals are like, yo, there's no trust in crypto, there's more trust in banks, that's why they're going after banks and imitating it. And that's why I brought this story up this morning. Not to be like, yeah, awesome, scams are down in crypto, let's all celebrate. No, I wanted to bring it up to show you that the reason that scams are down aren't because we're stopping them. It's because there's a lack of trust in crypto. But there isn't a lack of trust in banks, and that's why more people are starting to put money in banks. All right, you want an indicator out there that's going to help you know when markets are starting to really move? Russell 2000. The Russell 2000 is breaking out. Russell 2000, okay, you know how like crypto is like your super risky investment, and I put investments in quotes here, asset, right? It is one of like the riskiest things out there. When you look at stocks are a bit less risky. Owning, homes, real estate's even less risky than that. Not commercial real estate. You got burned in the butt if you were a commercial real estate person here recently. The Russell 2000 is like on the riskier side of the stock market. So things are bad when the risky stuff starts going down, and that's what they're talking about here in this report, okay? And I've got a picture to show you, and as always, an article you see in this video, along with all my other ones, will be linked in the description below. We got lots of learning going on. This is very informational, so I know we're having fun. We're gonna have more fun later, but let's just keep learning, okay? So the Russell 2000 is the risky part of the stock market, okay? Don't get me wrong. You've got other things. You've got pink sheet shit, right? All the OTC crap, right? You got that. I get that. But in terms of like, quote, what's legitimate, Russell 2000 is very risky, okay? There's a lot of volatility in the Russell 2000. Crypto has a lot of volatility as well. So what was the Russell 2000 high? Russell 2000 was super high when? 2021 to 2022, just like crypto. Why? Because it's a riskier asset class within that security division, okay? Why? Because there's a lot of risk in that pool, okay? What's interesting about that is as money is cheap, people put money into things that are more risky because the reward's bigger, right? Greater risk, greater reward. You could play the volatility on the Russell 2000. Look at that. That moved from 1636 all the way up here to 2400. That is freaking crazy. You can't apply a move like that to the Dow, not in that short a time, but in Russell 2000 you can. So when money's good, you can see people were going into the risky stuff. Now that money's bad, they're like, yo, got to get out. Look at this recent move right here on the right. And you know what I'll do? Let's do this. Let's zoom this in just a little bit, okay? Right here. I'm talking about this move right here. You notice how this has just really declined? Like heavily declined here, okay? Since about mid-July. So now your riskiest, or one of your riskiest asset classes within stocks, which is less risky than crypto, is starting to really erode. Why? Because as monetary conditions tighten, people don't want to take the risk with their money. So even on the stock side, when we're talking about all the, if you put your money here, they're FDIC insured, and you've got all this insurance, blah, 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 and disclosure, all that. I get that. But people are still taking money out at a high rate. So if you start applying all the things we talked about in this video and the other video, and don't worry, we got some XRP, XLM, XDC talk to 3Xs, not my 3Xs, because you sure as don't want to deal with them. That's why they're my Xs. But we're going to talk about how that applies to them. But I just think you should start paying attention to Russell 2000. Don't get me wrong. Pay attention to oil prices, gold, those kind of things too, right, for some good things. But Russell 2000 is something. Now, remember, if you start seeing the Russell 2000 start bouncing back up, when your most riskiest asset classes as a whole, as a ball, start picking up, that's usually one of your first indicators that the economy has bottomed. We're stabilizing and people have a greater appetite for risk. Which means then, if you translate it to assets that are even more risky, like the crypto markets as you see on the screen in front of you, that then could be a leading indicator into that action right there. Just thought I'd share that information with you, because a lot of you out there are looking for concrete things, okay? Not the hopium, not the bullshit, not the riddles, not a frog sitting on a who the cares, right? Real news, real information. So check out Russell 2000. All right, now we're going to look at 3 charts, all right? All these charts are the same time period, okay? So it's all like for like. And I want you just to look at the broad pattern, okay? This is XRP. This one is XLM. Look fairly similar, don't they, right? I mean, it's pretty simple, right? You kind of see the same moves, it's kind of mimicking, okay? Now watch, look at XDC. Moving on its own way. All right, so when we talk about volatility, when we talk about riskiness, XDC, statistically speaking, has been a safer bet in the recent term. All right, XLM, XRP being a little bit more on the risky side. Now, let's look at some time frames that kind of put better things into perspective for you. Okay, XRP is in light blue. XRP has some of its own moves, okay? And this is what I want to show you. So when we start looking about information and indicators, right? Russell 2000, earnings reports coming out, Fed stuff. I talked earlier about some UK Euro news, right? Some financial stuff. I did some debt coverage on that earlier. But now look at XRP. They had their own moves here, okay? This move here, this pump right here, was summary judgment fake news pump, right? When all the media hypesters out there said, oh, summary judgment, they're going to win, right? That's what that was right there. This is Torres action. This is Asian market pump. This right here is Asian market pump. This one right here that led to the beginning of this one right here. This one was the banking collapse, and this one was the Korean market pump right here. This, like I said, was Torres action, okay? So you can see XRP has more pumps. Now, XDC will kind of follow it, as you can see, right? But you can see, like, look, the move came delayed here and was higher percentage-wise. But XDC did not react to summary judgment news. They did react to the banking news, okay, so store of value. In regards to the Korean pump action, okay, there was some movement there, but it's not following it as closely. Now look at XLM, okay? And I'm gonna move this just a little bit so we can see it better, okay? Look at XLM in the green right here. Next to the biggest loser, next to XDC over this last, year and a half. But XLM moving kind of differently. XLM didn't have the same strength of the pumps that you saw from the banking, okay? This is right here, okay? This is March. Look at XLM's move here in March. Weak sauce. So when the banking collapse happened, you had more people rush to putting money into XRP, which was this right here in the light blue. You had more people putting money into Bitcoin percentage-wise, and more people putting money into XDC at that time. So when we look at a spread of the four of these, Bitcoin being what? The least riskiest, right? Bitcoin being, I guess, the one that we're pegging things to, right? Our trend setter. Maybe that's the best way we put it. You could see that XLM was not favored by investors when the banks collapsed. XRP, XDC, and Bitcoin was. Now, you can also see that during this move right here with the Torres pump, XRP obviously got some juicy move right here. Percentage-wise got the most, okay? XLM did get a move here as well. Okay, they're in green. You can see it right here. XDC got a move. It was delayed. The thing is, though, Bitcoin didn't get that move. And a lot of people have asked, well, why didn't Bitcoin move with it? Right now, Bitcoin is pumping, right? If we look right now, Bitcoin's pumping. It's pulling up the whole rest of the market. But a lot of you ask, why didn't Bitcoin move up with Torres decision? Well, that's because the Torres decision ties into securities. And Bitcoin has been pretty much unanimously decided as a commodity. All right, which means it's outside of the realm of the SEC. See, we're learning, okay? So you can see that Bitcoin did not move on that. Now, recently, you could see Bitcoin has had the bigger move. Bitcoin has been tugging the alts up and along with it. But recently, Bitcoin has been the biggest mover rather than the alts. So I just wanted to throw a lot of this data out there, a lot of observational data, and I think something we should look at too. Let's do this, okay? Let's put it into perspective because I want to show you something really cool. I want you to think of the big jumble of mess. And remember earlier I said how XDC has been a better store of value as of late? That's of near term, near term. I've got 6 months up on the screen. And the reason I want to talk about this is this last 6 months covers a bunch of stuff. Covers the Torres news, covers some of the fake pump stuff. We got a good broad spectrum of data. In the last 6 months, crypto was clumped together and has come back together. So look at Bitcoin, right, compared to the Torres pump action here. Bitcoin didn't pump, but it caught up, right? It made its move since the early part of October to now. Where the alts have really had some trouble. They've had trouble holding on to the Torres gains. As you can see, look at this. Just erosion, right? Eroding the gains. You kind of see a little flattening out here, but mostly erosion. So even though Bitcoin didn't get the same pump, they're still all in the same place. So when it comes to store of value, I'm looking at these charts and I'm like, all right, cool. If you're into crypto over the last 6 months, you're up pretty darn good. 18 to 24% depending on which one of these four you're into, okay? But if you're sitting here a little bit longer for store of value, you're still up. Why? This ties into the FTX crash around a year ago. So it's about perspective. Now watch what happens when we start zooming out. We start zooming out, this is where the problem becomes long-term hodlers, okay? So now we're starting to develop rotation and turnover of different holders within these economic segments. Your hodlers here are in deep shit. Your hodlers over the last 2 years are down 43% for Bitcoin, 50% for XRP, 52% for XDC, and XLM, 68% down. So MEP, Pizza Man MEP, that's why you get pissed. Because if you're a long-term hodler, and I know you are, you've been watching the channel for a while, I pay attention to viewers, you'd be upset about that. So it is all about perspective, right? Short term, I think we can look at it, we could say, hey, look, short term, if you're getting into this stuff, you're still good. You're double-digit returns, you're sitting awesome. Long-term hodlers, you're still deep in the red unless you've been DCAing your butt off here. Now, what's scary is if I zoom out just a little bit here more, okay? And I'm trying to get the timing right. Yep, this is exactly what I wanted to show you. Before the market started pumping crazy in 2021, look at how XDC made the move, XRP made the move. XLM didn't really make as big of a move percentage-wise, but XRP and XDC did. The irony is, though, is even though those two, and I'll move this box away so you can see it better, even though that those two made the biggest percentage pumps, check it out. Who's the winner over the last 2 years as store of value? It's Bitcoin. So now, and I'm sorry, we're more at the 2.5 year mark. I'm sorry about that. So over the last 2.5 years. So now when we start talking about store of value, conversation is obvious on why people are choosing Bitcoin, because over the last chunk of time, you've lost the least on Bitcoin. Now, what did you lose the most in? If you were a long-term hodler of XLM. So I just want to throw some market observations out there, along with why people are using Bitcoin as a store of value. I am not a Bitcoin maxi. I do not like Bitcoin, but I understand the statistical importance and why it can be a store of value. And that's what we're looking for XRP. The problem, though, with XRP is down 28% in that 2.5 year time period. That would not be a good store of value. XLM down 61%. No wonder the XLM crowd has been shrinking. Long-term hodlers, right? All these investments that have been bought all throughout here, they're just so deep in the red. And you know as well as I do, right? When we jump back to the chart of XLM, we go to the 2 year, all right? And let's zoom out just a little bit to make our perspective right. Look at that. We're at like 11 cents here. You know how hard it's going to be to get to 40 cents to start erasing all the losses here? Because you know you still have a good amount of people that are hodling from that early 21 part up into mid 2021. So again, let's keep it all in perspective. Let's start paying more attention to the Russell 2000. Let's keep our eyes on macroeconomic data. Let's understand why scams are down in the crypto markets. It's not because crypto is doing better. It's because people are trusting crypto less and they're trusting their banks more. So the scammers are going to banks, and that's where money is being put right now as a store of value. Because when we look at everything here on the screen over the last 2.5 years plus, they've all been in the red. So be honest. Tell me that wasn't fun, it wasn't informative, and you didn't walk away with at least learning one cool thing about crypto and macros as a whole. I thought it was fun, and I spend a lot of my time doing this because putting pieces of the puzzle together, the more layers you put together, the more pieces you put together, the more detail you can see of the picture. So those of you out there that just like charts, or those of you out there that just like news, or just like macro, or just like trading information, you got to make sure you put the whole picture together, because then it'll make a lot more sense. And then you'll be able to see opportunities in other markets. Speaking of opportunities in other markets, I've got a whole bunch of what everyone sterling silver that I have to start weighing. I might even start selling some of my smelted down metals online and at spot or even less. Oh. Why? Because I can keep my costs down. Because I'm paying attention to opportunities out there, and I'm streamlining my operation so that even when the markets are going down, I can buy things at a 40% discount, give you a 20% discount, because most of you are paying 20% on spot, especially if it's silver, right? What people paying for spot right now? $5 on the spot, and I can give it for the ounce price. Oh, juicy, juicy. Sorry, didn't mean to get distracted there. That's what happens when you run 8 miles. It was a pretty interesting workout. So it also happens when you love and have a passion for crypto and loves sharing the information with the fans. But that's why I brought the silver thing up, to show you that there are opportunities out there, but people right now are looking for store of value. And risky asset classes right now are not going to be a good place of store of value. What are you doing later today? No, seriously. Let me know what you're doing after watching this video. I'd be very curious to see what time of the day you're watching and what your plans are. Are you waking, baking, having a little bit of coffee, hanging out with Crypto with Klaus? Or are you winding down at night going, yo, let's listen to the dude in the crypto news that's always up to date? I want to hear from you, and you know I'll share it on my videos. So what am I doing? Recovery drink, ladies. Day off tomorrow. Not for this. I'm going to be doing news coverage. Day off training. You cool cats, though. Have a great rest of your day. Catch y'all later.